Let me say it a different way.
Okay.
People that use fiat currency as a store of value, there's a name for them. We call them poor.
The average movie theater ticket in the 1970s costed $1.55. Now, we pay upwards of $9 per ticket. Ever wondered why? The dollar since the 1970s has lost 98% of its value. This is called currency devaluation. And when it gets really bad,
the International Monetary Fund projects the country's inflation rate will rise to an incomprehensible 1,000,000% by the end of the year.
Demonstrations against Sri Lanka's dire economic situation turned violent. The protesters rallied close to President Gotabaya Rajapaksa's private residence as they demanded his resignation.
Not only is it happening in the US, it's happening in many other countries. And nobody pays attention to this, because at first it happens gradually, like when we complain about gas prices.
The rising price of gas has drivers feeling
angry.
No surprise.
But then out of nowhere, prices of goods and services will rise too high. The wealth gap will be too large, and our currency will be almost worthless, ultimately leading to a civil unrest.
They accuse his administration of mishandling a crisis that's causing fuel shortages and 13-hour blackouts every day.
It's happened over and over again throughout history. Thousands of countries, empires, and their native currencies rising and falling because of their financial irresponsibility, as well as expecting their nation to remain powerful forever. Now, although the US is far away from a Venezuela situation, it's best to understand this cycle of hyperinflation and national debt and what has happened throughout history, since it might happen again. And if you stick around, I'll share some ways you can potentially save yourself while everyone else gradually suffers the consequences of this phenomenon. This is the death of dollars. But first, let's talk about money. Did you know that there's a difference between money and currency? For example, thousands of years ago, gold was being used to trade in certain countries because of its rarity, beauty, and permanence. Permanence meaning it didn't corrode. This gold money was a lot more effective than bartering, but it started to cause some issues. One unit of gold wasn't equivalent to the next, meaning the gold wasn't considered money. Now, you may be wondering, what do you mean it wasn't money? People used it as a medium of exchange. What's the difference? Well, the currency in your pocket, for example dollars, are a medium of exchange. They're a unit of account because they have numbers representing its value, like a $5 bill, a $10 bill, or a $20 bill. They're durable, they're portable, and they're divisible because of coins. And they're interchangeable, since a dollar in my pocket has the same purchasing power as a dollar in yours. Money is everything a currency is, plus a store of value over a long period of time, which is why it wasn't considered money yet. It acted as a great store of value, but it didn't have the characteristics of a currency. You can't create more gold or silver, which is why they have maintained their purchasing power over the last 5,000 years, with its first known uses being in ancient Egypt. Currency is generally supposed to represent a real amount of money, like gold stored in a treasury. This was the case for the US until 1971, when President Nixon removed our gold standard.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
This meant that you could no longer redeem gold for dollars, and because of this, dollars or any other currency can be printed in unlimited amounts. They call this fiat currency.
If you have 4 bananas and each is worth $5, how much is the complete portfolio value of your fruit stock?
$20.
Now, imagine there was only $20 in existence, and that's how we're pricing your bananas. If they print more dollars, and now $40 exists in existence to purchase your fruit stock, what would happen to the price of each of your bananas?
They'd go up.
That's right. So when they print more money, when they create more money, the value of the money decreases because value is linked to scarcity.
Now, since value is linked to scarcity, continuously printing more money will gradually decrease its value or purchasing power and increase the cost of living for the populace. And the story of ancient Athens, Greece is a perfect example of why the system of fiat currency is so dangerous. In roughly 600 BCE, Athens, Greece was one of the first places to ever create a functioning economy with gold and silver coins. This made trade super simple and convenient because you could finally price goods and services at a certain amount of coins. Real money finally existed. Athens was also the first free market society in the world with a working tax system. Pretty impressive. Their economic system created a prosperous society, which allowed them to make marvels of engineering, art, and architecture that modern society still admires. So, what caused the downfall of Athens? When Athens got in a war with Sparta, that's when the monetary problems began. The army had to travel away from their hometown. So as the armies paid for goods and services from the local population away from Athens, the disappearance of coins made their economy bleed. To stimulate economic growth, Athens started debasing their coinage to pay for the war. For example, if you took in 1,000 coins in taxes, melted those gold coins down, and then mixed 50% of copper into your gold, now you can make 2,000 coins. That's called deficit spending. Sound familiar? And at first it worked. People spent the copper coins as if they were fully gold. But then, something interesting happened. The people began noticing that the coins in circulation were made from copper and began holding on to the gold coins since they were more valuable. Almost like how we keep gold as a store of value in modern society. So the gold and silver coins began to disappear from trade, and the copper coins remained the dominant currency. Eventually, it took a whole bunch of copper coins to buy gold or silver coin, and that's when gold and silver finally had a price. And they made these coins until they were almost 100% copper. This was the world's first hyperinflation, and it financially debilitated Athens until about 404 BC. That's when they surrendered to Sparta, eventually becoming nothing but a relic of a once prosperous society. The parallel between the downfall of Athens and the current trajectory of the United States is striking, echoing a timeless pattern of history driven by familiar forces: greed, war, and fiscal mismanagement rooted in fundamental human nature. Much like ancient Athens, the US finds itself entangled in wars and engaged in massive public works projects, all fueled by the deficit spending and currency debasement, while the citizens suffer the consequences of an increased wealth gap, higher prices for living standards, and relatively stagnant wages. Now here's a scary statistic regarding inflation. It took 200 years to go from $0 in existence to $825 billion in existence. Then, within a decade, we had bank bailouts and multiple periods of quantitative easing. By the way, quantitative easing is just a fancy word for printing money. This decade after the 200-year period, we got to over $6 trillion in existence. The Federal Reserve, our central bank, is printing a rough average of $1 trillion per year currently. Scary enough, many economists don't find the debt burden concerning, although we don't have to look far to see how detrimental being oblivious to hyperinflation can be for a society. Historically, this level of hubris leads to the downfall of great empires, as we just discussed. Athens losing its grip on power due to financial debilitation caused by war and unchecked spending, the US risks a similar fate if it continues down this path.
My son will draw down of over $300 million
And there's no time. This is no time to walk away from Ukraine.
And even though we're talking about the US specifically, every country on Earth is dealing with this. It's a global phenomenon. This information of the US money printing on a chart looks eerily similar to Canada's, Australia's, South Africa's, Russia's, Singapore's, India's, China's. They're all doing the same shit. Now here's what's even more terrifying about this. We forget that US dollars aren't only used in America. So just like Athens paid their soldiers in foreign lands and exported their inflation, the US sends money to other nations, like China, for manufacturing. And in return, they send you their TVs, bikes, shoes, refrigerators, and cars. And you may be thinking, well, that's kind of great. We print money that has no value and are able to purchase things that are valuable to use. No. Since the dollar is the world reserve currency, almost all countries use it for transactions. But gradually, the inflation causes its value to drop, and they will look for a new currency to trade with. We're seeing this currently with some countries. Even the BRICS nations are planning on creating their own currency for trade. This is obviously because of geopolitical conflicts and a trade war.
For many years, countries have been taking total advantage of the United States on trade.
But the result of this move would be the same. When a currency continues to lose its purchasing power, other countries begin to lose faith in the devalued currency and send it back to the nation of origin. Now keep in mind, we wouldn't just be dealing with a small city like Sparta sending back our currency. This would be the entire world. And it's estimated that about as much as 1/2 of the US currency supply is circulating outside of our nation. When the US gets a flood of money we previously exported, we'll see the quantity of money inside the United States grow much more rapidly. This is when the inflation of the United States dollar couldn't get any worse, and it would cause a global economic collapse, at first slowly, and then very, very quickly. So, if we know this, why do we continue to use these fiat currencies?
Most of the people who are buying assets at some point want to sell the assets at a profit. So
let me say it a different way.
Okay.
People that use fiat currency as a store of value, there's a name for them. We call them poor. Okay? Anybody that's rich in the world.
The benefit of fiat is quite simple. The rich get richer and the poor get poorer. This is the wealth gap.
The royal family of England, it didn't sell all of its property in central London in order to buy, currency or paper money. Nor did the royal family of Japan, nor did the royal family in the Middle East. In fact, they want to own the property forever.
The top 20% of Americans own most of the nation's wealth, while the middle class own roughly 5 to 6%. Now, who's in this top 20%? And why do they get so lucky? Put simply, these people are either those who have the power to issue money, like governments and banks, or the people who get the newly issued money early. For example, investment in commercial banks, large corporations, government contractors, and borrowers. These lucky few can spend the money before the prices of the things they want to buy rises to reflect the amount of money in circulation. They get products, services, and assets for cheap because inflation hasn't hit yet, which allows them to make tons of money by buying assets at lower prices and holding them until they rise in value. Prices of assets will eventually rise, and the wealthy holders will see gains without there being any improvements to the piece of real estate or company in question. The fact that most of the times the rich own these assets and resources to begin with means they're creditworthy enough to borrow from banks by taking loans. Naturally, the rich will exponentially increase their wealth. The opposite happens to the rest of society. The statistic reflecting the United States is that 78% of us live paycheck to paycheck. The reason for this? By the time the new money has trickled its way down to those with fixed wages and lower incomes, the prices of the things they want to buy have increased. As a result, their savings will buy them less and their wages remain stagnant. In some cases, they have to take on additional debt just to be able to afford the things that they were previously able to buy, which means they have to go back to the banks. That ever-increasing gulf between the rich and the poor gets bigger and bigger. For reference, since 1979, the wages of the top 1% have gone up 138%. The middle class is up about 15%. Now, even though the middle class wages rose, their spending power didn't, because of inflation and rising costs of living. If the middle class maintains the same relative income while the prices of goods, services, and financial assets continues to soar, it can become very difficult to even buy shelter or food. While not in the United States, a good example of this was quantitative easing 2 and the Arab Spring.
Victory, or it will be brutally suppressed. Tense new beginnings for Tunisia, its Arab neighbours nervous of how revolutionary feelings could spread.
Of 2011 was about one thing above all else, removing Colonel Gaddafi from power.
QE2 began in November 2010 and lasted until June 2011. During this period, the Federal Reserve injected billions of dollars into the economy by purchasing long-term treasury bonds and other securities. This injection of liquidity into the financial markets, while aimed at stimulating economic growth and easing credit conditions, had various unintended consequences, including contributing to the global food price inflation.
In a year of protests in the Arab world, high food prices helped to make oppression, corruption, and poverty under autocratic leaders even more intolerable. The political fires that burned across North Africa, many say, were kindled in Russia last summer. Extreme drought triggered wildfires and destroyed a third of the country's wheat harvest. In 2008, the last time global food prices spiked, Egypt was one of several countries hit by food riots and demonstrations.
When the money was created and distributed, the global food prices went up 60%. The rise in food prices disproportionately affected regions like North Africa and the Middle East, where a large percentage of the population already struggled with poverty and food insecurity, with many people living on less than $2 per day. In these regions, the sharp increase in food prices exacerbated existing social and economic tensions, ultimately contributing to the wave of protests and uprisings that became known as the Arab Spring. While the US most likely won't experience something so drastic and severe anytime soon, the increased wealth gap due to inflation creates self-reinforcing social unrest. The fact that rampant inflation is continuing makes lots of people concerned. So, that poses a question I've had since the beginning of my research on this topic. How do we fix this? I want to make something clear. Although the death of the dollar and the collapse of the global economy is imminent, there's still lots of steps that need to be taken before any of this happens. By analyzing the mistakes Athens and other societies made, we can find things to do as individuals to protect ourselves. And if everyone follows along, we might be able to protect our economy. In order to get money, we have to be productive. This is the reason we have jobs and businesses. Both are methods of providing value and allow you to earn income by solving problems. Solving problems allows us to do two things: create a more advanced society and create wealth. The more collectively productive a society is, the stronger their economy becomes, making them more inherently valuable to other societies. A great example of this was World War I and II. During this period, the US supplied Europe with consumer goods and grains, so the US was paid a lot of gold. Meanwhile, the European economy was channeling its money towards funding the wars. They did this by taking young men off of farms and making them soldiers, which decreased the production of agriculture. So the US started selling agriculture goods to Europe. On top of supplying agriculture, the US was making its own companies also create weapons, planes, and tanks. Some you might recognize, like Boeing and General Motors. The supplying of consumer goods and weapons from the US made things a whole lot easier for Europe during the war, so the US became very valuable. Now, again, people have this idea that war makes countries rich, but that's only true if you're supplying the war and not fighting it. The US didn't get involved until the bombing of Pearl Harbor on December 7th, 1941. This was during the last months of the war, and for the duration of the wars, around 6 years, Europe paid the US in gold for its trade. By the end of it all, the US had 2/3 of the gold in the entire world, making them the richest and most powerful nation, since Europe was basically broke, and the rest of the world had to share 1/3 of the gold. A new financial system had to be created. The Bretton Woods Agreement on July 1st, 1944, created a global system that pegged the majority of other existing currencies to the dollar, and the dollar's value would be pegged to gold since the US had an abundance of it. Eventually, the US strengthened the already existing global economy by facilitating the creation of massive global supply chains and creating policies that supported trade with other countries. This made the US dollar the world reserve currency, and the US became a global superpower because of their usefulness and productivity. The new monetary system guaranteed $35 could be exchanged per ounce of gold. Unfortunately, under the Bretton Woods system, there was no reserve ratio for the gold itself, where there had to be a certain amount of gold backing how many dollars we created. This allowed us to print a lot more money than we had reserves for. This deficit spending started because of the wars in Vietnam and Korea, which sounds awfully similar to how Athens started deficit spending on wars. Eventually, there was a lot more dollars in existence than there was gold in our reserves to back it. So much so that other countries began to notice and started asking for their gold back in exchange for their dollars. President Nixon then removed the gold standard in 1971, because if we let anyone exchange their dollars for gold, the global economy would collapse. Now, if you remember the first part of the video, since 1970, 98% of the dollar's value is gone. Yeah, that's why. However, the main point here is how the US made itself useful during the turmoil of the world wars. Their productivity allowed them to become the richest nation on the globe. The same concept applies for an individual in their own usefulness. A good equation to remember is productivity equals increased income. Some ways that you can increase your income and productivity are starting a business, finding multiple sources of income, and helping others provide their own value to increase their income. If we all prioritize productivity individually, then the strength of our nation will reflect that over time.
Somebody ought to smack you into next week. Get out of debt. When you don't have any payments, you know what you've got? Money.
I don't mean to sound like Dave Ramsey here, but this is important to remember. Spending less than you produce ensures you won't be in debt. This is true for individuals as well as governments with deficit spending. Diversifying your savings and investments allows you to be more secure in case of financial crisis. Instead of holding all of your savings in a single fiat currency, you can buy gold and silver that is historically a great store of value. It could also be good to look into foreign currencies, stocks, cryptocurrencies, and other forms of investments to diversify your wealth. This is arguably the most important. By educating yourself about finances, politics, and other important things, you increase your chances of making advantageous moves in times of crisis. By understanding the world, you are able to find more ways to create and maintain wealth. Hence why I made this video. I want to help the world understand the severity of this situation before it's too late. A crisis will always wipe out the oblivious and enrich the educated. And that is how you deal with the death of dollars.